Follow me at Gumby9662C. Nothing I'm saying is a trade recommendation, just some research that I'm doing. Like the video if you like it, and I appreciate any and all comments you can at the bottom of the YouTube video. Okay, thank you. Futures are down, and I think they're going even lower this week. We had a build on crude inventories on last night's inventory, and then we had a draw on the gasoline, the UGA index. So gasoline's catching a little bit of a bid this morning. Now this is the area that I think coming into today's numbers has a lot of risk to the downside. We'll see what the numbers come out, but I do think that there's probably going to be a build in gasoline, and then with the futures roll over Sunday, we are looking for a gap fill on the gasoline here soon. Okay, first thing you guys need to pay attention to. Transports broke the TRAN. This is an airline weighted index. They broke their accelerated uptrend yesterday. Price levels trump the trend line breaks, so keep that in mind. We're still within these price levels, but we're starting to break weekly support levels on addition to the trend line. So keep that in mind on warning that transports are fading and they tend to lead the markets. Also, your railroads broke the primary accelerated uptrend. That's another one to be concerned about. Now, you're still above your 50-day moving average and above your cloud, so this is a bullish pattern. Okay, you would typically buy dips on the transports in this situation, but it's something to be on watch and be concerned about. I want you to also be aware of your XLY, your consumer discretionary. This is a parabolic trend line uptrend, and we are threatening a cross of this parabolic up move in your consumer discretionary. And if you look on your daily chart on your XLY, we closed right on that trend line, and with the markets opening even weaker today, it's likely the consumer discretionary is going to break this morning. Another area to take note is your XOP. That's your oil and gas exploration index. It did close below the 200-day moving average, so that is a warning sign. It hasn't done that for some time. Hell, it was way back April, May of last year, the last time that happened. So that is a warning on your energy space. Now on the more bullish side, your XHB, your home builders index, we did have an island top put in, but yesterday, despite that island top and on a weak day in the markets, the home builders outperformed most of the rest of the markets. So just keep this one on watch. Let me show you one other chart here. Your home builders versus the SPY. Your home builders have pretty much been underperforming since last September, and it looks like we're going to get outperformance in the home builders starting anytime now, in my opinion. Now, be a little concerned about your home builders, though. This month tends to be an up month for your home builders, and you know that may be a one-off because April tends to be a weak month for the past 5 years for home builders. So you're getting a little conflict here. Another area that looks to possibly outperform the S&P, and this is a more risk-on space in the markets, and that's your healthcare. If Obama does all the stuff he's planning on doing, Trump, and it sounds like they're going to address the healthcare issues before they address anything else. This area to me looks like it's going to outperform for the not so distant future here. Okay, and we are in a fairly strong seasonality period for the healthcare stocks over the past 5 years, so that is supportive of that scenario. Now, I do have the materials, XLB, the materials sector, on watch here. We have this rapidly accelerating signal line on our weekly chart here. And come next week, we might quite possibly be breaking that signal line on the weekly. And as you can see here on the daily, we are threatening a change of character in our materials sector. So just keep this in mind. We are still up here above our cloud, above our 50-day moving average. But this is something to watch. I do think we're seeing rotation of dollars out of the materials stocks. And if you can look at this relative comparison on the SLB, or the materials versus SPY, since about February, SPY has been outperforming materials. So just keep that in mind. We do have some monies coming out of those material stocks, and it doesn't look like that trend is changing so far. Right here, right now, your steel index is right on the cloud, and we broke the 50-day moving average as of close yesterday. So this is a warning sign that our steel stocks might be ready to see more weakness. Like I said, the markets are looking to open lower, so just keep this on watch. And you can tell that your steel stocks have been on fire versus the S&P, but the past couple days we've seen some more selling pressure in the steel stocks versus the S&P, and we are testing this uptrend on a relative comparison basis. So it looks like that there's a decent chance that the steel stocks will start underperforming the S&P. I know technology is catching a strong bid here, but Priceline is also tied to your consumer discretionary areas, and it had a very good earnings report, and it gapped up. And if the markets do start to sell off, there is a fairly decent chance that Priceline will come back in and fill this gap. At the very least, test the gap. So I do think Priceline is overbought here. The final stock that I want to talk about is Amazon. I do think Amazon, there's a lot of risk to the downside on Amazon. I know technology is holding up the markets pretty well here, especially the semiconductor stocks. But if the markets were to roll over, keep in mind transports like your FedExes and UPSs are under pressure, and especially since they broke that trend line. Well, now Amazon has its own air fleet for transportation, so that's a negative for Amazon now. And then you have also the consumer discretionary threatening a breakdown here, and that goes right with their Amazon's online sales. So if the markets do start to roll over here, I really think Amazon is a decent short opportunity. Well, that's all I got to say. I do appreciate all the comments you can give me, in case you see something I don't see. But yeah, it looks like there's some issues in the markets here, and I think they're justified. Okay. Thanks a lot, and I'll try to have an evening video. Thanks a lot.